All right, guys. So as always, right, these sessions, and I'll go ahead and hide the video it's feed, so we won't have to get in the way on the YouTube recording. All these calls they go record themselves at in the YouTube, and you guys are there. But yeah, guys, this is the chart from last week. As always, right, these calls are for educational purposes only. Any trade idea or suggestion is pure speculation on my part. So please treat it that way. And as always, right, um, I'm your host, Gerardo G. Money Pius from Dallas, Texas. So this is the chart, guys. This is the chart that was there last week. This is the speculation that we had. And I scroll this one. True, that's true. We said that price was going to go to the weekly max up, and it did, right? It got there right away. Monday, it kind of got there three-fourths of it. Tuesday, it slightly surpassed it. And then from Wednesday, Thursday, and Friday, that kind of was the ranging system right there, right? So again, though, right? If you don't remember, right, why do we how do we calculate this weekly max out? Does anybody remember? And again, these are study groups, guys. You can always unmute yourself and ask questions. But you guys, what? How do we get this weekly max out? Anybody remember? Anybody remember?
Yeah. Um,
Take an average of the three previous candles of what the pip movement.
Of the week, right,
Okay.
Mr. Ron?
Yeah, and then I guess
Of
you look at how far
mhm.
the the candles are going to move for the New York session, the average 21 days. But you look at the average of the last 3 days, I believe is what you use. And
On
you
this
went
one,
from
on this one specifically, is the weekly max out. So it's the last. You're right, but the last 3 weeks.
last 3 weeks. Okay.
Yep.
All right, well go. All right.
Yeah. And that information, right? We get it from the indicator, which is this HTF, the higher time frame candle boxes for lower time frame charts, right? Right there by K Rolo. I have a template, right? I have a template that when again, this template system is really important. Okay, indicator templates, they're all saved right here, and it allows you to kind of create different indicator systems depending on your chart. I really do like that. I really do like that because it also the synchronization from like iPad to MacBook or whatever it is or your phone, the indicators they stay consistent because sometimes they don't sync fast, right? They don't sync. But if you have it saved up there, it works. So when I use my box system, it's right here, right? This is kind of like my main indicator system right here. Okay, the at G Money trading box. I believe it's a set of 8 indicators. That kind of has I don't use all of them. Some are kind of in the background for when I want to turn them on. And then let's say I want to turn into the sessions higher time frame box. This is right here. HTF plus session. You click on that, and there it is. I have 5 now in there. Let's see. What the heck? Oh yeah. Yeah, but it's supposed to be just 3. Okay. A sessions indicator and 2 higher time frame candles. And it keeps the whole settings. Everything is there, right? Everything remains in place. And you can quickly choose change back and forth. But yeah, so this numbers up here, right? That indicator, the previous weekly candle, the HTF candles. I have it set up for 1 week, meaning that's a whole week of information, or that is one weekly candle. And then if you turn this on, show high, low, range, and pips, it gives you this little number that you see turning off and turning on. Okay. So that right there is measuring the entire movement in dollars. And then we just add a 0 for pips. Okay. So let me just quickly hide the drawings. Let me get the little measuring ruler. I'm gonna start it from the edge of this box, and then I'm gonna take it to the top of that box as close as possible. You see 162.60, 162.97. I just missed it there by a pipette. Low to high. Let me take the little thing off. There it is, 94-ish. There it is, 94-ish, give or take. It is exact. I'm just not getting it by the exact wick. It is exact. That number is exact. There it is, 80.64, $80. So that's we took the last 3 to 4 weeks, we added them together, we took the average, and then we came up to about, I think it was 110, I believe. Then I brought it back down to 100, and then I manually just mentally brought it down to 100. Then eventually we just said 90. Okay. So I think at that time, when we measured this weekly max out, the market was closed. So I think we got it on that first candlestick or where the market closed, right? And let me measure right quick from there to there. And there it is, guys. 80. Well, I did it at 83. Oh, you know what? I think I got it from at that, because ideally you want to get it from the low, but we don't know the exact low until the market makes the low of the week, correct? So I think we got it from 50% in this example. I think we got it from 50% of the previous week, and give or take, right? I think that's 100 pips right there. So give or take. All right. Yeah, I think that we did that. So that's how we got that. So we're gonna do the same thing today towards the end when we speculate. But our plan was for us to get a pullback, maybe about 50% to Friday's candle, and then take off. And it didn't. I mean, the moment the market opened on Sunday, my Sunday afternoon, this thing pushed up. Tuesday, we barely had a 23 retracement and done. So, wouldn't you guys say that if we would have got this trade from here at some point, held it into Tuesday, and we had our TP right there, we should have been done for the day, right? Let's say we got the trade the moment we got above the previous weekly high, right? Let's say we got that. Let's say we let this candlestick open and close above the previous weekly high, okay? And then we basically just kind of executed right at the open, okay, of this candlestick right here, a 2 hour candlestick. We executed at the open, and then our stop loss was at the low, and then this is the open here. Just put that there. Excuse me. And our take profit was up here. Alrighty. Let's see how that looks for us there. And let me rewind to that specific candle. All right. Is everybody following along so far? Okay, we're all good, right? We're all good. Perfect. 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 Okay, so market execute at the close of that candlestick, stop loss at the low of that 2 hour candle, and we take off to the top side. 3 to 1, almost 3 to 1. And all we're doing, guys, the main thing is answering that first question. Where is price going? We need to visualize a destination for it. That's what speculation is. Where is price going? All right, we did that just by simply getting averages, right, of previous weeks. And then, okay, so where are we at now? So in this scenario, is the 2 hour candle. It broke above the previous weekly high. And again, though, it's just bad habit that people go through, right? It's just the whole grabbing liquidity scenario. Those are the little things there that just kind of like make you think twice, like, oh, dang it, but momentum takes up from there. But this trade right here, guys, okay, this trade right here, it's a 3 to 1 in percentage wise. From entry to stop loss, that's about $17, 170 pips. Is that a lot? I mean, it is a lot. But look what you're getting in return. The opposite. Okay. You're getting in return a lot more than the opposite. So from entry to stop loss, okay, it's about a $17 drop. Okay. From entry to take profit, it's a 55 pip movement. All right. So what do those numbers mean? Okay. If you guys don't have this one, it is on one of my templates. Pips, I think if you put in there, yeah, pip value. I love this calculator. Pip value calculator by FX 360 Thailand. You add that calculator in there, and it comes here on the right hand side. All right. And this is kind of where, let me see here. I was asking Chat GPT how to better explain this. Let me see if I can quickly find what uh what I searched up. Yeah, here choose Chat GPT. Who's in favor of Chat GPT? Who's against it?
Yeah, I use it on Twitter, but actually, that and Microsoft's Copilot is pretty good too.
Okay.
Yeah.
Yeah. Hey guys, I use it a lot as well now. ChatGPT.
We might.
I will not do anything without going to ChatGPT first because whatever I've thought of, it just 10x's it.
True. That is true. That's a good way to put it. That is a good way to put it.
Yeah.
I use it.
Yeah. And again, though, just an assistant, right? It's an assistant to really help us,
I
um,
love it.
explain certain things. Like you guys know Marcus, right? Which we need to get him back. He's been busy too. I've been busy. It's just been a busy year, which is good, right? Which is good. Um, he's more eloquently versed, and and he he's not in favor of it. I'm just kidding. Let me see. I was just trying to look for something. I did. Um, okay, I couldn't find it right away. But anyways, so guys, this is where I think this is where my partner Kevin, my trading partner, he kind of made sense of this, right? Where it's like what pays us is the pit movement multiplied by the lot you use. Okay. And so every time you look at your charts, right, you got to go in there and say, hey, how much do I want to get paid today? Or how much do I want to get paid this week? And the only way to for us to figure that out is just to know, okay, well, if I put in there one lot size, and how many pips did we say this was? There was 170, right? You're risking $1,700 if it goes in drawdown, right? Or if it stops you out. Because here's the thing, guys. Here's the thing. Okay. Let's say, let's put it like this. It's gonna be a great example. It's gonna be a great example. Let's say you have a $5,000 account. Okay. And you enter a 1.0 lot size right here. And according to the multiplication of one standard lot size times 170 pips, you're putting at risk. Somebody to help me out with the percentage here, if you don't mind. You're putting at risk, right? How much of your account? How much percentage is it? 30 plus, give or take? Plus or minus? I like that, Andrich. 0.34 exactly. Now tell me this. Is that good or bad risk to reward management? Who can tell me that? Is that good or bad?
It depends on how much you're willing to risk.
I like that. I like where you started right there, Danimal. It just depends on you guys. It goes back to you, not what to me, not what everybody else says. It goes back to you. Again, remember when we're trading, the money in our trading accounts is money we can afford to lose. So this is just basically extra money for us to try to multiply our account. Correct? Now, granted, you put in one. Let's say you put in there you're demoing on one account standard lot sizes, and then when you go back to your regular account, you're supposed to put in there a .10 instead of a 1.0, and you hit market execution, and you're like, oh my goodness, what did I just do? Right? Again, though, right? Are you ready for that drawdown? But regardless, right? You're gonna lose 34% of your account if this goes wrong. But if it goes correct, right? How many pips do you say it was? 550. Just made 5 grand. You doubled your account and $500 more on one trade. Okay. So it is a lot of pips. It is a lot of pips, right? But I think, again, if price is going to go to that destination, I don't mind the scalping or smaller pips only if we're looking for buys, right? Because that's kind of where the momentum is in the direction. But regardless, all right, that is something that you can hold. I mean, that's 5 grand, 5,500 on this lot size multiplication in a week. That's not bad. In 2 days, actually. In 2 days, because this one particularly hit it in 2 days. All right. So again, the guys, when you know how the money multiplies, good question there, Sylvie. When you know the money gets multiplied, you're free to do kind of like, oh, I get it now. I get it now. Okay. So margin. Can the margin hold that account? It may or may not depend on the leverage you use, right? And we also got to ask yourself, can the margin can the trade be entered? It all depends. That's a broker situation, which is true. Okay. However, we hit play on the next candle. You barely go into drawdown, guys. You see that? Let me rewind that one more time. Right there. Okay, that's the open. Can you guys let me see? That's the close of price, correct? Close. And what price level was this? If you press and hold on the candle, open that up. The close is 37.13.16. 37.13.16. Oh, what I just say? 37.13.16. Okay. And this scenario project is just more about we'll go into more specifics on that. Like we'll go into more technical analysis that here in a second. All we did was 2 hour candlestick open and close. The moment it closed, we entered. That's kind of all we did here. Okay. There's no real like technical scenario there other than I am buying the moment this 2 hour candlestick closes. That's all. And thank you for the question. My pleasure. Okay. So the next candlestick will open. Let me put this to the left. Okay. The next candlestick will open. it gapped down a little bit, right? It gapped down and then it shot up. Well, let's see what's the low of this price because that's the lowest it went. Okay. What's the low of this? The low of this is 3712.39. Can somebody do some math for me there? There it is. So we only went into drawdown, not even $1, right? Let's just do the math. Let's do the math here. 3713.16 minus
about $1 and some change, it's
yeah.
about 23.
Okay.
I think it's $1.23.
This is what 16, so that's 5. That'll be a 0. So 10. This will be a 2. 7.75, is it? Oh, yeah, you're probably 7.
Yep,
Yeah,
0.75.
0.777. Yeah, I subtracted there incorrectly. 0.77. That's it, guys. That is all the drawdown you went into. How much money was that?
Depends on your lot size.
They wouldn't even let me put a 0 points. Actually, no. So that's 7 pips, right? 77 cents is 7 pips. Correct, right?
Correct.
Let's put it 8 pips. We went 8 pips in drawdown. $80, guys. $80 in drawdown. So how much is 80? What was our account originally? Our account originally was a $5,000 account. What's $80 off of 5,000? 80
About a 1 point some percent.
0.016 times 100. 1.6%. Do we? I think this one just takes off, Andrich, on this example. Let's see. Oh, you're right. Look at that. Go back to break even. Okay, perfect. So this first part that we explained, it was just about how pips multiply with your lot size and so that's all it is, guys. That's all it was. And again, though, I think that's a foundation that needs to be we do teach a lot. We do talk about a lot. But just knowing how the numbers multiply matters because it allows you to know what your check's going to be, right? Your paycheck's going to be, or your investment's going to be before anything else. Okay? Before anything else. And there it goes. That would have been a $5,500 week right there in 2 days. In 2 days. So, good example there. As I mentioned, I will go ahead and speculate the rest towards the end. I will definitely go into some class now regarding just a bit on structure and buying low, selling high examples. And we'll go back and back test the box, and then we'll recap. Any questions or comments on this? Anything that you guys didn't know that's like, okay, I think I got it, or any comments, please?
Well, I would have missed that trade because, first of all, based on what I know or what's been taught to me, I assume that I know. you let it get up. Okay, I understand getting up the previous weekly high and close. But when I'm looking at that candle, what stands out in my mind was that I would have put a fib on that 2 hour candle and then just let it come back into. Am I correct into that? Because I wouldn't have known to get into that after that closing candle. Okay, I'm gonna jump on this candle. Um,
Good one there, Mr. Ryan. I think that's something was that Prachi was thinking when she asked the question as well. Now, when we apply strategy, absolutely, okay. You measure that candle, and let's go back to that consistency of what we do, okay. In this candlestick, right, we close below the 23%. So ideally, right, we would like to for us to buy here. Oops. And the things you start seeing now are like this. Okay, how do you execute, right? How do you enter? Okay, well, in this scenario, you always put your stop loss where you started your fib. Okay, right there. And technically, right, Mr. Round, we take profit right there. Correct. But we had I erased it already, but we had a weekly target in mind the entire time. Let me just rewind it so I can get back to that target. Yes, right there. Perfect. So just kind of thinking back to the strategy that we do. Here goes that previous weekly candle. Excuse me, that 2 hour candle. We measure it with the fib, of course. We closed below 23%. And ideally, right, we want to get a retracement or a touch at 38%. And then it takes off, right? Ideally, we want to take profit at the extensions, but we had a weekly outlook or max set up there, we could have done that. I'm liking when we measure one candlestick by itself on an intraday level, 2 hour, 1 hour, and lower, even a 15-minute candlestick. I am liking the longer extension of negative 0.618 or just completely doubling it. Okay, doubling that candlestick. Okay, as a longer target, because if we do the entry at 38% with the stop loss at where you started the fib, the risk to reward ratio right there is barely at a 1-to-1, which is fine, but the 618 will give you a better risk to reward, and then the one will give you obviously a much better one. So that's just something that we consider. Yes, absolutely. So let's see what happens after this. It does not touch the 38%. Okay. But remember, Dan, you had a strategy here. Remember that? You can just put a buy stop at 23%, right?
Yes, sir.
Dan kind of was kind of seeing how price moves. And Dan was like, all right, you know what? We can put a buy stop at 23% with the stop loss at, was it 38 or 50? I couldn't remember. Either or, right? Either or is fine. And the next candlestick opens and you immediately go in profit. And look, we're going to candlestick rejected though, guys. You see? Right at the extension. I think the next one is the one that Andrich said that it came back and kind of took the low of this one. But again, right, you put your buy stop at 23%, your stop loss at the 50, same target. Okay. Okay. There it is. And there it goes again. And there it goes again.
Perfect setup. Like I said, that little buffer and stop loss is an acceptable loss, and if it took it out, that'd be cool. But I just see it didn't. No.
Good stuff there, guys. So look, let me rewind a little bit. And let's go back to this 2 hour candlestick. Because okay, I think this is where I can connect the lesson. and everything that I'm trying to say right now. All right. Let me get my notes here. What I like to focus on only, guys, the pattern that sticks to me the most, so I can use the fib, is trending structure. Trending structure. That's all it is, or a single candlestick. We got the candlestick right here. But the pattern that I like to focus on is this. Okay? That is the pattern that I like to focus on. That's it. Nothing else. This is the foundation to trading, in my opinion. So this is bullish structure, correct? This is bullish structure. And bullish structure has this these components. I'm not going to put higher high in there. Ready, got it? So if structure is bullish based on the little labels that I have here, where do we want to buy from? At what label do we want to buy from?
Oh,
At a higher low, correct? That's where we want to get in. Okay. At a higher low. And actually, let me do it like this, because we want to get in there. So low, high, higher, low, and yes, let me do it like this. Let me do it like this, like it's supposed to be. Okay, like that. So low, high, higher, low, and so this is our entry, right? If that's our entry, where's our take profit? At a higher high.
hi.
All righty. And where's our stop loss? At the low. Beautiful. So low to high is just basically communicating to us direction, correct? From high to higher low is no engagement. Let price come back to a level, and we buy there. TP1. Well, not TP1 exactly exclusively there. You take profit. The moment you take profit, you're out of the market, right?
Yes.
And then everything shifts forward. You're not in the market anymore, so your entry's out, and then price makes a new high, and now we have a new low established, and we got the pattern repeating itself now, right? Low to high, we wait for a pullback. That's our entry, and then our take profit. Price comes in, we get in there, we measure our entry to stop loss and pips, so we know how much is at risk, and then we go. Up it goes. And that's literally how the market moves when it's trending. Now, because the market is fractal, because we have different time frames, etc., these patterns, they expand, they contract. In my opinion, price never consolidates. It's just doing something else in a different time frame that we can't see it on the current time frame. Okay. But there it is. Yep. Everybody follow along right there. How price moves, where to enter, where to stop loss, and where it could go. Okay, so now, right, because you guys can see that now. Okay, that's where the fib comes in. So technically, this is the pattern that I'm looking for. And then I'm visualizing my entry to take profit. Correct? And that's it, guys. So that pattern that I'm always looking for is this one in black. Low, high, higher, low. That's what I'm focusing myself on. Low, high, higher, low. And I'm trying to make money here. And that's where the fib comes in. You get your fib. You start it from the low. You expand it to the high. You can stretch it out like this. You can do it like I kind of do it like this sometimes, most of the time. But basically, the one is connected to the low, and the zero is connected to the high on a bullish example. This pullback, we're waiting for it to touch 38%, 50 or 61.8 or 78, whatever it is. Okay. But that's our entry. The lower we can buy it, the smaller our stop loss, right? Let's say we get in at 50%. Let me put the fib like this so you guys can see it better. Okay, let's say we get in at 50%. From 50% to the one, that's an $11 drop. But let's say you like to get in between the 61.8 and the 78%. I think that's Fernandy's favorite entry number. What's the difference there? What's the difference?
About $3, I think. The 6 or an 8. I can't read the price on that.
That's a six.
Yeah. Okay, cool.
You get.
And
Let me put
fine.
this. You're right. You're right. You're right. Let's see.
Instead of
Put
break
like
out the magnifying glass, G.
that. But all right, guys. So here it is. Okay, we'll put it 11. I did change it up a little bit. It was 5, 11, and 7. That's an $11 drop, which is how much? 110 pips. The $7 drop, right? Which is 70 pips. Okay. And then back when we go back over here, it just goes how the numbers multiply. The first entry has 110 pip stop loss. So you're putting at risk $1,100. The lower entry has only 70 pips in stop loss. So you're only putting at risk $700. Right? That's how the numbers work, guys. There is no right or wrong. Let's say that you get in at 50%, but you don't put a full standard lot size. So you have 110 pips at risk, but you put in there a 0.5. So 550 or half of that. Okay. So here you put a 0.5, which is the same as $550. And here you put a one, another trader puts in one full standard lot size. And what was their risk? 500, right?
Yeah.
Well, it was, oh, you're right. It was 7 because it was 70 pips. Correct. Thank you, Doctors. You see? And let's say you lose this trade because it does stops us out. Buying low does not always guarantee you're going to lose less money if your lot size is bigger. So it's more about just knowing what's at risk, knowing when you can lose. And if you know those numbers, you're more in control. We're adding a little pebble to being in control of something, right? Being in control of something. And I think that's the thing. I think that's what we're looking for in trading. The markets are very unpredictable. We got fundamentals, technicals, all these other indicators in the way of things. Trying to help, trying to help. And I think we just gotta find ways. How can I find the edge? Okay. How can I find my edge? And I think one of the edges that we can find is not technical analysis, guys. It's knowing your numbers, knowing what's multiplying. Because if we can do that, if we can do that, you're not we're less afraid to enter. Sylvia, when your common challenging skill, you mean the technical analysis is a challenging skill? That was what you mean specifically? And if that's the case, I mean, yeah, it is challenging because it's a lot to learn. We're learning a new language, but we know numbers, right? We know numbers. We know how to add numbers. We know how to add and subtract, multiply percentages. And as long as we know how those move, I think we can find our edge. We can find our edge. All right, guys. So let's see here. Yes, numbers are universal. Absolutely. So entry at 50%, take profit at the extensions, correct? That's the easy part. So, and again, though, price, it's just very interesting how price likes to move through those levels. All right. So I'll share this chart with you guys just so you have that for your records or just any data you guys save. And one more example here that I want to tell you guys is just what I like what happened here, right? This 2-hour candlestick. Let's look at its story. Open and close, very bullish. The next candlestick did not retrace to 38%, but it did open below 23 because this candlestick closed below 23%. It immediately went to that first take profit area, correct? That's how price likes to move. And then the next candlestick wanted to push up, but we were already at the extension that it came back and retested the 23%. Don't we always say that let price establish itself above 23 and then take it to the extension? And then sometimes it comes back and tests the 23%. That's exactly what happened there. And then from there, where does it go? To the next stop, the negative 0.16. And Prachi, in this scenario, so 23% of weekly, this is a 2-hour candlestick still. But if you have the what do you call the week, I think that's very near the previous weekly high. But no, this candlestick right here, Prachi, is just a 2-hour. We're on the 2-hour chart. And I think the last class too, we said, right, that it's just a candle scenario. This happens over and over and over again in all time frames. But here, right, the next candlestick, this one came back and it broke it broke the 23%. A few hours later, it came back and retested the 23%, and then boom.
BEC.
Mm-hmm. Yeah. And then from there, it goes to the next one. But just look how price is stopping. That's my thing. How price is literally stopping at these levels pretty consistently. Boom, 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 and boom. And it's just very interesting how the Fibonacci numbers just walk, how price just walk at those Fibonacci levels. And again, this is just candle per candlestick. Let me put an arrow right here, signifying that that's where that 2 hour candlestick is. And let's go to a 15-minute chart. Let's see how it looks from there. And that's how it looks from there, guys. Big impulse that touched the negative zero, the negative extension, right? And then did a retracement. Right. This fib, like we wouldn't have drawn this fib the way it was because in this time, like if we were to draw a structure here, where is the structure here for us to pinpoint? I mean, here's the low, here's the high, here's the low, here's the high, here's the low. This is not enough pullback right there. Maybe this is enough pullback, maybe not, right? So that's why I love to fib one candlestick by itself. And as long as you get it high enough in time frame, you have a story. You can use a fib. Like Danimal, here, where would you draw? I mean, please let me know where would you draw your structure here, Danimal, if you were to draw any.
Oh yeah, this was a challenge for me. So I'd start like if I were to walk it up,
Mm-hmm.
I'd start down here. There's my high, got my low, got a high. This is where it got confusing. So my next impulse was all the way up here. This
Okay.
was my high.
So, but this is a higher low right here.
That would be my higher low, right?
Okay, no problem. Perfect.
And then this would have been my pullback
Mm-hmm.
and then up the extensions.
Okay, good. So see, that's good. Here's the animal structure right here. But what's the problem with this? It's just left with too much interpretation, right?
Yeah. Yeah, there's just too much information because there just wasn't enough in this here to give me a clear pullback.
Mm-hmm. Now let me take you to maybe a
However,
5 minute
if
chart
I
demo. Let me take you to the 5 minute chart.
there we go. There's
How does that look for you there?
so to me this is still a confusing one. It's still this big impulse. It's still a challenge, but I can see that would have been my impulse that fit right in with the 23%, 38, was it the 31? Yeah, 38%. That's good enough for me. Entry there.
But in this scenario, Daniel, if that's your impulse, good observation there. And this is really good. This is a good example here, guys. If this was Daniel's entire impulse, which he's not right, he's not wrong. He has, see, look at that. If that was Daniel's impulse, so this is your low right here, Dan, right?
Yeah.
This is your low, and that's your high. You never got an entry.
Never got an entry. Yeah, that was the challenge. So I take smaller bites. So like I would take that impulse, that impulse.
Mm-hmm.
The challenge here was this big channel pattern right here. And that's
Mm-hmm.
exactly what I would have drawn. So I would go back to basics, what I did before. I love channels. So what I would have done was drawn my lows around there, my highs around there, wait for this channel to clear, break, and then go.
Perfect.
to have several strategies for different things, situations. When I saw this mess, and that's where the boxes come into play.
Good, and that's exactly where I was gonna lead to, Danimal. So see, guys, you see how the one candlestick matters, guys, right? A good, strong candlestick gives a good play,
So
especially if we can go from it.
yeah, so leave this one candlestick here. So let's go to like so we got this low to high. If we go to a higher time frame, like the 2 hour, what would that be? So
Yeah, so this we were in a 2 hour chart that entire time, and
uh,
so let me see.
I just want to
Let
see where that
Yeah,
impulse really
absolutely.
fit in.
That was just a series. That was just a series of not so good looking candles. Let's put it like that.
That's what I thought. Yeah, yeah. This is oh
There it
yeah,
is.
look at that. This is yeah, that would have been a challenge. That was a challenge to play, but that's where the one candlesticks makes a difference.
Absolutely. And with
So
that
I'll start with
example right
this
there,
candle
guys.
here,
Yes, go for it.
and then just keep I'm just walking it up, candlestick to candlestick.
Mm-hmm.
Yeah.
Yeah, with this example here, guys, I mean, just on that lower time frame, it looked messy.
Hmm.
It was left for many interpretations. What's a high? What's a low? Did it go high enough, etc. If we just look at these series of 2 hour candlesticks, the candlesticks are making higher lows because the
Yeah,
next
the only ones
candlestick.
that didn't was right here. This one never really made a pullback.
Mhm,
So this to me is just a continuation candlestick. Then
mhm,
we got the pullback on this candlestick and then tried to do that swing up. Yeah.
yep. But hopefully you guys saw that exercise on how you know lower time, just having a bigger time frame candle in perspective can guide us on the smaller time frames, because if not, it just gets left with too much interpretation. What's a high, what's a low, and all that stuff, right? And that's kind of where the box system also comes in on the 5 minute chart, guys. Okay, because we couldn't even really get good structure here, right? We couldn't even get good structure here. Let me bring in the um the boxes. Where's it at? Where's it at? It's over here. It goes. Remember, guys, we're working on a small update on this where you can show and hide the boxes. And there it is. Okay. So the box allows us to kind of filter price action only to what is present. Okay. Every box we'll start the rewind. Let's start it right here. Okay. So you see the box system does not want us to, it filters candlesticks to only see the last 17 hours. The big box is. If you can understand the big box, you'll start to understand the smaller ones. So in this example, we're just going to focus on the small box. Okay. As of right now, the structure is bearish, correct?
Mhm.
Why is it bearish? Well, because the highest candle inside of the box is that wick, and the lowest candle inside of the box is this wick. So if we would connect the dots, we would have a impulse in that direction. Everybody following? Perfect. But the structure is in danger. So right now, we're not talking about momentum. Actually, we are talking about momentum, but not really. So you can ignore this for now. Okay. All we're focusing on is on structure and timing. I'm really having real fun with this class, guys. This is a good class. So let me zoom in a little bit better right there. And then I'm about to, we're gonna study this here. Okay. So the timing says 0 hours or 0 minutes, excuse me. The future of this structure is endangered to shift. Again, right? ChatGPT, me talking to it and kind of talking, and this is what it said to me, right? Structure is king. Momentum can, what was it? I forgot exactly. I think we went over it on the Friday.
Yeah, momentum is queen.
No, let me see here.
Rules the house.
So here, where's it at? There it is. Okay. Structure is king. Momentum can control or overthrow the king. Timing decides whether the king will fall or continue to reign. Isn't that cool? I would have never thought that by myself, guys.
Game of Thrones, gotta love the analogy.
That's you know, structure is king. Momentum can control or overthrow the king. Timing decides whether the king will fall or continue to reign. That's what the Marcus would say. Anyways, so timing is about to expire, but the structure will remain bearish. Why is that? Because this little flag is going to try to find the highest candlestick in the box. And it's this one right here. That candlestick right there. So technically, right, this is still higher than anything over here to the right. So let's add a candle. See, still bearish. Still bear, even though there's 0 bars. This basically is saying that, okay, this flag is going to look for the next candle. That's all it's saying. There it is. Still bearish. Now we're in position now that when this candlestick when we get a new candlestick in the front, okay, right there. You see, it shifted because only inside of the frame it's looking for the lowest candle and the highest, and then the structure has shifted from bearish to bullish. The box hasn't changed colors. It's something that I'm kind of testing my eyes to see if I want to keep it or not. I think I do want to keep the box system that bluish color and red color. It just helps better with the eyes, but as we are right now. So that is structure of what the box reads to us. It helps you just filter the price action and only worry about what's in there. So now we're looking for buys, right? Because the structure is bullish. Okay. The midpoint was known as equilibrium. Price balanced out 50% of this box, correct? And it's an equilibrium. So now everything's bullish. And we got rid of this low and price attached itself there. And then from there, let's just kind of see how the candlesticks like to walk. See, what did price just do before it went higher? Came back to 50% a fair value price or equilibrium. And we literally just studied the fib, right? If this is the low, there it is. Look at this movement, guys.
And that's how I figure out how you can live in the 5-minute time frame and have
impulse correction to 50%, It tried to establish itself above the 23. It couldn't really get its legs or volume behind it and came back to equilibrium at 50%. But we're still bullish, right? Let's see what happens. Boom. Came back and kind of did a double bottom two touch of 61%. Look at the difference in strength in that push. This one was kind of like a little choppy trend. And boom, look at that big impulse up. You see, that was a strong candle. Okay.
Is that what you call an M wave? Is that the M wave?
Which one, Mr. Ron?
I'm just saying, is that an M wave? I'm trying to learn those different categories. Is that what you call an M wave based on that scenario you just showed?
Yes.
Impulse
Price,
correction,
yes.
Yeah.
Yes, sir. Exactly
And
it.
not only that, it's not only an N wave, but it's an impulse with a complex pullback.
Mm-hmm.
Another impulse.
Yep. But yeah, that is an N wave. That is an N wave right there. Okay. Now see, and what Dan just mentioned is correct, right? If we can visualize this in two ways. Okay, we're talking about an N wave, right? N wave. So impulse, correction, impulse, right? That's the N wave. But this was a complex one simply because we went impulse, correction, tried to make that complete the N wave, but we didn't. We had one more push down, and then we had a push up. All right. But yes.
Yeah, it didn't even make a very good harmonic pattern.
But see how everything's still moving along with the fib, guys. You see how it reached the extension. Let's see what happens there. But granted, because we got that higher high now, right? Now we have to readjust the fib. So again, the big box is meant to filter price out. Sorry about that. The big box is meant to filter price out. And now, we have that. Okay. A new fib. All right. So another feature that I'm working on, guys, right, with this update is, obviously we have the pips moved right there, 376. Okay. I also have something called range notes that's kind of improved and updated a little bit. And this box cannot be overextended, right? Let me rewind it back a little bit here. I may go over to like 8:45, guys. If we are being recorded, so we need to go. We got it. We'll make sure we'll put it on the YouTube ASAP. But yes, I may go to 8:45. Okay, but it's been a good lesson that it just flowing through, right? So I should be able to make this bigger. Is that a little better for us? Okay. Just how we did the weekly candles, the sessions, the box has the same information. Okay, the box has that same information. And again, this is not really technical analysis, this is number analysis, right? 287 pips is from the low to the high. That's the range. Everybody got that? That's the range. There it is. $28.72. 287 pips. So what's this number right here? What is those numbers in the middle?
Those are our targets for that range.
Mm-hmm. So 375, you guys don't have this update just yet, right? This is the New York average. 445 is 90% of the daily average movement, low to high. Anybody got that? Any questions there? Questions, comments, clarity? None? Because
Can I ask a question?
absolutely, absolutely.
A second. Okay, so at the bottom of the screen, the information box, like structure, momentum, and timing, can we move it on one side or the other? Because with the ETM indicator on, it's one over another.
Okay, let me see here.
Although the ATM
On
one,
your phone or just in general?
The how do you call it?
The lot size and pips right here, Sylvie?
Oh, I can move that one.
Yes, you can move the ETM one for sure.
Okay, I'll move that one. Thanks, sir.
Yeah, no problem. Yeah, so so this one, the ETM one, click on
Yeah.
that one, and then I think where's it at? Where's it at? Yes, the lot size, because that's the lot size calculator. It should be programmed to be bottom left. So you probably had a bottom center maybe originally. That was the original setting, I think, and that will move
Yes.
to the left. However, right, if you're on your phone, everything's all crunched up and they will overlap.
Oh, it's the Quantum Trader Suite I have.
Oh yeah, that one's way outdated, so be way outdated.
yeah, way out of date.
Oh, I'm
Uh
out of date.
yeah, so Danimo, if you have that indicator link, please share it. If
Yeah,
not,
give me a second. Yeah, I
yeah,
get that.
Danimo, yeah, you want the ETM candles 2.1.
Okay, I still use the other one.
Yeah, this is it's just renamed. It's just renamed
Okay.
to this one. You want to use that one. That's the most updated one.
Okay, thanks.
My pleasure. Yeah, we go way back, Sylvie. That's good. All right, guys. So here, right, that's what that means there. Right? Wouldn't it be nice to have some targets up there that told us where those ranges are at? What did you guys say that, right? It would have been nice. It would be nice, right? Well, they do exist, right? They've always existed. But this time, I was able to code it where projection ranges. There it is, guys. I was able to code it with the label this time.
That's awesome, G.
That's the New York range, and that's the average daily range, 90% of it. So as long as the box is smaller,
I just copied the link in the chat.
perfect. So as long as the box is smaller than the ranges, everything is SMT in good range. Okay. You hit play. These lines don't move. These lines stay static. Okay. These lines don't move. They stay connected to your box. Right there. What is it saying right there? We touch the blue line level. It just says caution. What does that caution mean? So just double click that. Come back to the range notes. Caution, target one reach. Momentum may slow or pull back. Approaching daily range. So let's say we go back over here, right? Let's say we entered it. Let's say we entered at the 50%. Everybody agrees there? We enter at the 50% right here. And we put our stop loss at the low. So where's our take profit at? At the New York range. Let me rewind it just a little bit more, just so we can kind of play a better scenario. And this is just using one box, guys, okay? Impulse correction. We actually got in at this level, okay? And we went in profit and we went back in drawdown, but we held our ground. There it is. TP hit. Caution. You guys know what the caution is. And then let's continue hitting play. Well, extreme caution, right? 504 pips. What does that mean? Target to reach. Market is overextended and volatile beyond the daily range. So it's not good to count. I mean, there you can expect a pullback, and there's a lot of things, but things are out of balance. Okay, things are out of balance based on averages. Based on averages. So if we go on, this is an area where we need to avoid it. We need to wait. We just need to wait for these candlesticks to fall off. We need to wait for the frame to get smaller before things start balancing out. We're still in caution mode. We're still in extreme caution mode, even if it goes pushing up. Still, let's not engage the market. Let me see. Look at that, guys. We missed trades, but again, though, right? It's hard to really find an entry when it's like that, unless you held one and let it go. Yes. Just don't jump in for a still based on, yeah, you don't. It's also really tricky it's really tricky to buy as well, right? It's really tricky to buy as well. And that's where the smaller boxes come in, guys, because it kind of helps us keep that smaller frame in there. But based on the big frame, we're definitely overextended. Let's not engage. There he goes. The market's still super overinflated. And the ranges have just been so big on this scenario. But again, look. We are in extreme caution because we're at 479 pips, right? You hit play. And just still pushing up. All right, let's see when it finally balances out. There's a lot of pips moved, but and that's why these numbers were slightly updated because right there, okay. These numbers were slightly updated to reflect the new price levels. But in this scenario, Goldie is bullish, right?
Yeah, and as you said, that's where the smaller time frame boxes pay dividends.
Correct. Yeah. Now, granted, we will be still kind of ignoring a bit the cautions, right, Danimal? But the smaller boxes,
absolutely,
yeah,
absolutely. Watch the cautions, but when you put the small, and now that when you put the 23 lines on,
oh yeah, good point.
That also makes a huge difference.
Yeah, you good point. It sure does. The 23 percentile lines, guys, are really, really important. Price likes to definitely come to those a lot. And this is definitely an area where you buy low. Good point there.
Yep. That's when you can trade within the range. And that's what I'm trying to say is like you can live very comfortably on the 5-minute time frame.
Absolutely. But yeah, guys, this is just how the box filters, right? We went over, how it works. You got some settings to play. That during that period of time, the market was very, very, very volatile. And Friday's setup. This is your setup right here. I think that you got Andrich right here, right? Friday setup. You saw an impulse. You measure it. There goes your New York range. There goes your average daily range of 90%. Came back and then right there, look at that. And look, the ADR 90% did not allow it to trend too much beyond that. And then from there, it kind of fell down to the middle of the day. Now, this was, I wouldn't have taken this trade that way. But again, though, it just shows how, these levels are very, very important. It gives the red light, green light scenario for all this. Okay. We'll continue. Obviously, this is part of our main education. Let me go ahead and wrap this up with a top-down analysis, and we should be done here in a few minutes. The top-down analysis are pretty quickly. Good. All right, let's get it going, guys. So this one, I do like to use the sessions indicator, top-down analysis for the week. We simply go to the weekly candle. We get its high, we get its low. Doesn't this remind you of that 2-hour candlestick that we just did? Remember?
Exactly.
We had a huge 2-hour candlestick. The next one did not can come where the previous one closed, this one open. So it could be to where like we can hover a little bit there, then come back down, touch the open. I don't know. I mean, that's why this market is fractal. Previous weekly high, Donald says yes. Starting to see those patterns fall down. They're all there, man. It's all the same thing. It's all the same. All right, previous weekly high, previous weekly low. We'll immediately go down to the 4-hour chart, and we'll get the data like this. We'll fib this right here, low to high from the 4-hour, and I like to use that color fib right there. Okay. What kind of structure do we have inside of the last week? Well, we do have a nice bullish impulse, retracement, push up. Would you guys say is a double top? Right? It's a nice double top. Double top can give some stronger pushes down, right? Very near double top. Basically, we got two big sellers from there pushing price down. So,
especially since the last candlestick is engulfing the previous one.
Yep. What's catching my attention again is the 23%. Right there. And that's going to be our deciding factor right there, guys. I think if we can stay below 23%, we may do a pullback back to these wicks, maybe to 78.6%. So long story short, let's start from the best angle. Let's say we'll buy from 78%. How about that? That's the setup right there. Buy from 78% of the previous weekly candle, and we take it to the top. But if we stay below here, I can see us doing this first before we go up. Dan, any comments there?
You're right on. That's exactly what I was thinking. Because we got that gap right here,
Which is also the previous weekly high.
Yeah, exactly. Previous weekly high is right there. Yeah, beautiful.
All right. Let's just see what kind of ETM candlesticks we have between the daily, 12-hour, 8 and reserve.
Right there's the zone we got to pay attention to because we've touched it 1, 2, 3 times. We might come back one more touch right in here. And if that fails, then we can hit the 78. So we got a fair amount of support right here.
Yep. Yeah. All right. So this is how it looks on the daily, guys. Okay. Remember, it's going to be challenging going even below the previous weekly low. Is it? Nice. So I like this. See, look, 3 consecutive daily candlesticks, and we got a pause. So that's interesting as well, right? Let me take those 3 candlesticks by themselves. And there goes the 50% of those 3 candlesticks, which is very near our potential entry. That's going to be key right there, in my opinion. All right, I'll keep that box in there. Let's go to the 12-hour chart. Nothing too much here that can really catch my attention to highlight. 8-hour, nothing too much either. 4-hour chart. Let me see. Yeah, nothing there other than the previous weekly high. Okay. Let's go to the 2-hour chart. Okay, there it is. What else you see here, Deb?
Exactly. It said this zone right here on the 4-hour, there's a rally-based rally that I definitely think is going to be where the challenge is, which is right in that zone anyway. However, we've got this BEC sitting right here that could still act as that low and keep it above the 618, or at least bring it down to the 618.
I like it. Let me turn on my the 1-hour boxes. Okay, let me go ahead and hide these just for now. All right, on the 1 hour time frame. Okay, there goes 50% of the last 204 candlesticks, which is very near there as well. So I do like that, guys. I would like us to see a deeper pullback to maybe 50% of the week to start off, and then we could potentially go down to the 78, and then from there we buy. I like this 1 hour rally-based rally, which I think lines up with the 4 hour one, Dan, that you said, and this little fair value gap action right here. It's all right there, guys. So I do like this. Anything lower, we're kind of playing with just too much lower intraday time frames, old data. Let's see how the 5 minute one looks. Yeah, so we can get the structure to shift and the momentum to be in support.
The oracle right there. That's what I'm looking for.
We will attack this to the downside.
This 23% level.
Mm-hmm.
And see where it goes. Yeah.
All right, let me see how this looks on the Oanda chart, which we don't really use that one on this example, but yeah. There goes that rally base rally in the 4 hour. That's going to get in the way before we get to 78%. And as you guys see, it became a factor right there with multiple touches. All right, yo. So this concludes the class. Thank you guys for hanging out with us here an extra 5 minutes past the 8:45 hour. Let me go ahead and give you the weekly speculation for the week. This will be recorded and saved to YouTube as soon as possible. Yeah, it was a great class, KG. Again, it helps out because you guys' interaction helps the most. Just kind of gives it a better flow of the session. So that's kind of where definitely it helps. And as always, guys, just to kind of limitate just to limitate kind of like the noise. Remember, you guys here are, if you're on the there's the legacy group, you guys kind of have an extra chat. Some of you guys are part of the Yes Academy, some of you guys are not, which is perfectly fine, right? What I'm gonna do is I'm gonna focus more on the Telegram. We're gonna combine things. The Discord, it is too noisy in my opinion. It's there, it just has too much information. You guys in the legacy group, we had a WhatsApp, but not all of you guys are there. I'm gonna move everybody to the WhatsApp group just so you guys know that that's the legacy group in the WhatsApp. But the Telegram is where we're going to be focusing on the chart updates, because if not, I'm going to be sending charts here, there, and there, and that's where it causes confusion. It causes me confusion as well, trying to share in different channels. So moving forward, first priority is anybody that's a legacy member, which all of you are. If you're not in the WhatsApp, I'm going to share the link on the WhatsApp. And I'm going to share the link on the Discord so you guys can join the WhatsApp. That's just kind of like the WhatsApp will be our like support area. Just, hey, gee, help me out here. Whatever you need, kind of, because you guys are legacy members. Okay. The chart communication will be through Telegram. And then we'll talk about that once we get to that, once we get everybody moved over. All right.
So we're getting rid of Discord then.
We're getting rid of Discord, yes.
All right.
Okay. But appreciate everybody here. We will see us. Oh yeah, we'll be communicating in chats, and we'll go from there. Thank you guys. Yeah, one less app to worry about. Yep, absolutely. Everybody have a good one. We'll see you guys next week. Enjoy your Sunday. Bye now.
Have a good one, G.
My pleasure. Thanks, Daniel.